You got me?
Got you, Gary. How are you?
I am excellent. How's your
Uh,
morning?
it's if you were bearish, you're enjoying it. If you were the other way, you're wondering why. Everyone's trying to attribute it. You want to share your screen, Gary? Because you
Um,
and I'm thinking about it. You and I have been there, had some interviews where maybe and we were a little negative, and we got like a 3 to 5% correction,
right.
and then it came back, and everyone started calling me the boy who cried wolf, even though worked for a while. This seems a little different this time, doesn't it
Yeah.
to you?
Yeah. By the way, I'm trying to share screen. It says you cannot share screen while the other participant is sharing, whatever that means.
Okay, so there you go, now you can.
All right. So, first off, you mentioned the thing about, oh, but the market came back. Yeah, the big indices came back, but what I do, I have a radio
Still
show.
waiting for a screen share, Gary. You have to
Oh,
click
hold
it,
on.
and so we
Screen
have
share.
a
Share
green box.
screen.
Yeah.
Share.
Yeah, so you're going to get to the underlying weakness of breadth and everything before the
Yeah.
sell-off began.
Yeah, well, when I every night I scan 1,500 to 2,000 names, 200
Yeah.
sectors, every country, every commodity, and just every day on my radio show, I would say S&P's fine, Nasdaq's fine, Nasdaq 100 is fine, small caps are underperforming, but and then I would show, let's see if I can get this up here. Hold on. Then I would show Union Pacific. Then I would, and therein lies my point, where just I can show Cheesecake Factory, and I can show FedEx, I can show Caterpillar, and just every day I would just rifle off this list: economically sensitive, transports, industrials, drug stocks, rails, truckers, MasterCard and Visa, a bunch of retail,
Yeah.
restaurants, dish drives. So underneath the surface, and I didn't know how bad it was until I guess this Morgan Stanley guy came out this week and said since May, in the Russell 2000, like 90% of the stocks have dropped 10% or more, and 55% of them have dropped 20% or more. So what's
Yeah.
happening today, I know there's this thing going on with Evergrande,
Yeah.
but as I always state, you can only weaken or top, for now, a market that was already weak.
Right.
Narrow markets are easier to sell off because there's less strength underneath the surface, and there's so much of this Microsoft that is going to hold things up. And little by little, piece by piece,
All the fangs, and they're starting to roll over now too.
Yeah,
Facebook looks ugly. Yeah.
last week Apple breaks the 50,
Yeah.
and for your people's information, every dollar on Apple is $16 billion of market cap. They have 16 billion shares, which is an amazing story by itself. But just last week, they started getting things that they weren't getting before. And I had no idea we'd walk into today. There's no way of knowing, but underneath the surface, the S&P they were coming after and finally breaking the 50. And just I had a big piece in Facebook, and I sold it on this day, and I got pissed off because they reversed it on Wednesday, and I'm thinking, oh, they're gonna rally this thing up, and it looks like they're not. I owned Apple, I owned Facebook, I owned Google. Because of how strong they are. Now Google's breaking the 21 head for the 50. So the bigger indices are now under pressure while so many already were. So I don't know
it's
how.
kind of like that expression, Gary, that when the troops retreat, and we have different generals, it's a different army here in 2021 than it was, in 2008. The generals get slaughtered, and so Yeah, and don't, the government's going to play a role, I think, in some of the things. They're talking about Instagram causing depression in girls because all the other girls on Instagram have perfect bodies, and that Facebook knew about it but continued with it. There's been talk, antitrust talk about the big
Oh,
tech firms.
daily.
Do you think that they're going to actually, create a debacle by trying to break up all these big tech firms,
Well,
Google
well, you're
included?
going to hear certain politicians, I'll leave the names out this morning, on a daily basis go after them. There's one out there, I'm sure you know who she is, goes after the big banks every day. And
Oh, her, yeah, yeah,
and unfortunately, there's a president of the United States that last week basically, and you can correct me if I'm wrong, told the world that wealthy people are cheating the system. He came out and
wow,
said that on taxes and all that. Everybody, and he pretty much said that. I'm like, wait a minute, did he just say that? So yeah, there is an assault on wealth and success. I don't want to get political, but leave
yeah.
no doubt it's mentioned
Well,
every
we know
day.
what channel you're on. We
Yeah.
know what
Well, it's
you.
nothing to do with the channel that I'm on. It's my
Oh,
belief
okay. All
before I
right.
was on the channel or after. I
Yeah,
just I just listen and watch what people do and say. And
yeah,
on a daily basis, there is an assault, and that's that. But back on markets, um, every day. Here's economically sensitive stuff that topped out in April. Parker Hannafin,
yeah,
things like that. And some of them just topped out recently, like Sealed Air. And just remember the infrastructure bill and MLM breaking out. Well, now it's cracking badly. The transport. So underneath the surface, it was already weak. We weakened more here. We're not going to get any tapering because Jay Powell, since Christmas of 18, every time markets got in trouble, he
yeah,
had either Bullard come out with easier rhetoric or did easier rhetoric, leading till to October of 19. Before the pandemic, he started printing money. So
yeah.
taper is off the table. Maybe they threaten it, but markets are going down. So that's the end of that. And we'll just
Do you have a feel for magnitude of this sell-off? Is it going to
uh,
be a quick thing or drawn out, or I
well,
actually think it could last until April.
I've been one that have been saying the next bear market's going to be a monster.
Okay.
uh, that when it hits. And the reason is that the expectation of the markets are it's always going to be saved by Powell and Lagarde and the rest of them. And you add the other two things up, massive leverage and very, very high valuations. And when all those things meet, you get real bigger bear markets. I'm not sure we're there yet. But the ingredients are there in that we're going to, notwithstanding a big reversal today, which, by the way, can happen, notwithstanding that, we're going lower. To what extent, I'm not sure. If this is the start of a big one, a bearish thing, I think it can be bigger than normal because I've shown the chart of the margin that is skyrocketed. And that's
Okay.
got to come off first. And again,
Uh,
another
we have
markets,
margin debt at record highs, Gary, going
it,
into this.
it has just absolutely skyrocketed. I
You
think
have a
I have,
visual on it?
yeah,
Yeah.
I'm about
While
to,
you're pulling it up, Gary, I want to get your reaction to this. That this infrastructure bill is kind of tied up right now. It doesn't look like it can happen.
yeah.
And is it possible that engineering a 30% correction in the stock market might change the sentiment of some people, some congressmen and senators, to be more in favor of an infrastructure spend and a compromise than if the market was just kept going and doing okay?
Well,
Could it
I'm
be
a,
could it be
I,
engineered? Could this be
yeah.
engineered to get the infrastructure spending through?
Well, I'm a cynic, big time when it comes to politicians, but I don't know if this is engineered because this is, the the topping out process near term has been going on for a while.
Okay.
But anything's possible with these people. But I don't know if they have that much power. And I do believe that Jay Powell knows the one thing that can't happen is we lose the wealth effect,
Yeah.
because that I think has been a big part of the economy, that is just laden with debt. And so I'm not there. And by the way, I'm showing the picture of margin. That is late inning type action, that type of move in margin.
That was in
Not
May?
Yeah,
It says May.
in the last few months, and
Okay.
notwithstanding massive amounts of IPOs with most of them losing money, secondary offerings. I think there's been 700 or 800 of them over the last year to 14 months. There's just a lot of ingredients just to watch out for. And by the way, I say this, the other part of what I've been saying on the radio was, hey, Datadog looks great. Workday just gapped up on earnings. Watch that. Tesla looks like it's setting up to go higher. So there have been, a decent amount of stocks in somewhat growth land that have looked great. I don't know what happens today with them, and we'll be watching them closely. But you got NVIDIA and ServiceNow and Integris and Datadog. I've got a pretty darn good list. Upstart, which has been a moonshot, UPST, which don't buy it here, it's too extended. So there's been good stuff out there. It's just been very few and far between and very narrow. And the narrowness may be coming back to home here. And, we'll see. I'm open to anything happening, but leave no doubt the big indices are going to break the 50-day. And that's not good news, and we'll take it from there.
So is the 200-day the next logical stop around 4,100, like a magnet?
I think there's that chance, and the important part is transports are already there. There's things that are already there. The F.A.C.E, the China, has been just, you got the death cross back in May for the F.A.C.E. The emerging markets look, terrible. I noticed Brazil, I'm putting up, terrible. And just in the last week, the utilities look like they've topped out. And then names that were acting great for a while. Look, here's Otis Elevator, which again,
Elevator down.
Yeah, it just, we're a big believer right up the 50-day, and if you finally break it, that's troublesome. There's been a lot of stocks that look like Otis now that were acting just fine and just cracked. So we're in a moment of time. It's September. I'm not in this camp that, oh, don't worry and everything's going to turn. I'll let the market decide. All we can tell you right now, there's some issues. And by the way,
one of the only instruments up today performing, which got hammered last week, is gold. You see anything in the miners where they may be a decent hedge during this time frame?
I would have thought that a while ago. I really do believe that the crypto has gotten the gold mining people. I really do believe, because with some of the things that have happened, I would have thought gold and gold miners would be a lot higher. So I think there's a component of that. To what extent, I don't know. It's just a guess. But gold and gold stocks have been in a bear phase, bear market, whatever you want to call it. And you respect it, and you just wait till it.
How about bonds, Gary? There was no flight to quality Friday. I think there may be some today. Are people going to hide out in the bond market here?
You would think that would be the guess. You would think, and it's set up to for the TLT to go this way. And if you look at the 10-year, little move down. Yeah, there's that potential. And remember, when the market gets defensive, it goes defensive. It finds defensive. So yeah, and by the way, it's just not what I'm already showing you. The other thing that woke me up here even more is like a 3M, which is not a leader, but look what they did to it right there. And Honeywell, same day. And I'm like, what's going on with these Dow stocks? So just, more and more bad, less and less good. And now I was looking where the Qs are because they've been holding up pretty darn well. So the Qs are going to open about right here, which,
At
by
the
the way,
50,
does not look like the end of the world. But since it's such a crowded trade, you worry that, everybody jumps off the boat at the same time. And that's something I'm going to watch closely. Just we're overdue, and we'll see where it takes us.
Let me ask you this. I know a lot of people are pointing towards Evergrande and what's happening in China.
Yeah.
But there really isn't any news that sparked this sell-off. There was, no black swan, no specific news. Are we going to have, are there maybe a fiscal cliff? Do you think that they're going to raise the debt ceiling? I mean, Mitch
Of
McConnell's
course they'll
saying
raise
no.
the of course they'll raise the debt ceiling. Are you kidding?
Will they
That's
let
what
a
they
few days lapse before?
Yeah, because they like, pissing off the electorate and getting the politicians, oh, be on our side, and look, we're getting closer and closer. Okay, we're voting for it. Yes. So I'm not so worried about it. But Evergrande, I think they have like 300 billion of debt. And I've always said, if anything's gonna come back to haunt, it is the debt that's out there.
Yeah.
And I still remember we were told by Bernanke and
Yeah, it's
Paulson
contained.
that everything's contained, don't worry. And then we find out that mortgage-backed securities were leveraged 10 to 1, 15 to 1, 20 to 1, and all hell broke loose. So they're telling us now, oh, don't worry, the banks are capitalized great, the lenders are good. And I'm saying to myself, wait a minute, the people that have taken us the 29 trillion of our debt here are telling us not to worry about debt. So that's something I'm going to be watching. I don't trust them as far as I can throw them. I equate them to my New York Giants team if they're up by 3 in the fourth quarter. So, I don't trust them. And again, I just watch the market.
Yeah.
And I sold all my stocks in the last 2 weeks, except I own a couple of ETFs that have been holding up great. And we'll see what comes of it today. Hopefully we get the mother of all reversals, but I was looking at the German DAX today, which had been strong. That looks like a big top maybe. So just, put up the umbrella and don't try to be a genius here, and recognize the average stock topped out in February when the bubbles popped, a lot of the bubbles. In May, started getting other things. And
definitely
now,
in April, a lot more in April, then a lot more in July, and now the averages are the last to go.
Yeah, that's how it works.
Yeah.
This is where you get the masses say, oh, here you go. We already knew underneath the surface, hell, I'm not going to own 3M or Caterpillar or Deere or Cheesecake Factory or Cracker Barrel or Stanley Works or Comcast and Charter, which topped out last week. They report, oh, the Dow, S&P, NASDAQ, and all we've heard is, oh, they're down a couple of percent, no big deal. I'm saying, well, if they start playing catch up to everything, it's a big deal. So again, I don't have a real thought process how bad it gets, but we just get out of the way and let it do its bidding to whatever point it decides to, and go from there. And if they decide it's the big one, we'll know, because you can't hide bear markets. And by the way, let me show you what a bear market looks like. It is the inverse ETFs. Here's your Russell. Here is your inverse. If you want to know what a bear market looks like, this is the classic, how you just continue to descend below the 50-day, and every rally into the 50-day fails. Now we're going to get something like this. And if it holds, that's troublesome. The same goes for the VIX. That's been in the bear market. If it breaks above, there is your turn to the upside.
There's a 5-point gap. There's a gap higher opening of over 5 points today. So it is going to do that. Yeah.
As expected. And if it holds, bad for the market. If it doesn't, that means the market may, stiffen up. But just to show you what a bear market versus bull market looks like, and it doesn't look perfectly like this. Here's your
I've played in these graveyards before.
Gotcha. Here's your
All
SH,
right.
and here is
Yeah,
the bull market, the SPY,
right.
ascending along above the 50-day. Every pullback's contained, and here's the SH,
Yeah.
and every rally has been rebuffed. And so this is classic stuff. I've printed these charts. I put them up on my wall for the future, and it doesn't never look that perfect. But those are two perfect ones. And now we get a change of complexion today, possibly. Powell may announce a printing of 20 trillion bucks today and buy up the whole S&P for all we know.
Yeah.
And we'll just go from there.
Where can we hear your radio show, Gary?
We post it at GaryK.com every day.
Okay.
And what we do is we mix the bad people, Washington, with the markets.
Okay.
But the mainstay is the markets. We have this service also where we do webcast after webcast showing all this.
Okay.
And last week took us out of all our stocks. Why? Because the market took us out. And now we're going to see what happens. And we may be in short sale city for a while as things crack, and we'll go from there. Just take your time here. Keep your emotions in check. That's so important. Pay very little attention to what everybody's telling you, because Wall Street is famous for the following words: don't worry, everything's okay. The market's cheap. It's a value. If you loved it up there, you doubly love it down here.
Maybe we need Charles Schwab to come out and say, relax.
Yeah, just
remember that? Just relax.
Yeah. What I just say is let price and the market action be your guide. Wall Street has a huge agenda, and that's to keep you in at all times, thinking long term, never telling you that Citigroup is still down 90% from the highs of '08, and many have gone by the wayside. So just we'll take it as it comes. And look, I like markets going up. Let's hope it gets defended, and I'm all for it. But at the open today, it's,
What a great day to have a pro like you on, Gary. Someone who's seen this before, who's seen both, bull and bear markets in their career, and some very good advice and rational things to do in an irrational world. So really,
we've studied bear markets 10 times more than we've studied bull markets, because if you're one of the few that can stay out of the bear, you are just so way ahead of the game. And in a market this year that has a bunch of Eiffel Tower tops, caused by bubbles like a CARV or a TLRY, where people are buying in here and people are yelling and screaming about it up there, and then getting there, what's beat. It's just very important to keep your wits about you, especially if this continues. And just so many areas have been under pressure, and now we'll see if the bigger indices, which have been masked by money flows into the big names, we're going to see whether they have any defense in them or not. And
we'll see how the passive investor, if they remain passive. And one thing to keep in mind, in nature, bears do not go into hibernation until winter. So they have a couple of months to, go steal some picnic baskets at Yosemite. So, Gary, thank you so much for being with us today, and really great to hear your views, and giving, there's wisdom in experience and years of doing it, and you definitely have it, Gary. Really glad that you came here to share your views today.
Thank you. We're just trying to put our best foot forward daily, and appreciate what you guys do. You're very, very big help to the masses.
Yeah, well, and you know what? You're also my trading warrior brother. So I hope that every trade you touch till we get back together again works or doesn't hurt you. Okay?
I'm with you, buddy. You take care.
All right. Gary Kaltman, and you could follow Gary on Twitter at Gary Kaltbaum. That's his Twitter handle, and we'll see everyone tomorrow for Turnaround Tuesday. You could join the team in 17 minutes for the morning edge, and I'll see you tomorrow. Adios. Oh yeah, one more thing. Don't just count declining issues, count your blessings, and I'll see you tomorrow.